Morning, folks. Quick update on a number which I think is really important. Well, two numbers, really. First of all, the Tankan index last night from Japan came in at quite positive, which is actually, I suppose, yen positive. Previous number was -3, expected was 1, and we got 6, so pretty good number from the Tankan, an important index. It says medium here, but actually it's quite important. But when it comes to the European currencies, we've got the pound inflation rates, or the British economy inflation rates. These numbers, although on the surface of it look pretty okay, an improvement in overall general inflation rate, but when you delve a little bit deeper and you look at the core inflation rate, you'll see that there is some severe problems in the UK with inflation. So let's just go through the numbers quickly. GBP core inflation rate, previous 0.9, expected 0.7, and we got 1.3. That's for April. So for the month on month, much higher than expected. Core inflation. And then PPI came down quite a lot. So producer price index down year on year for April, etc. And then we've got month on month. PPI came down again. So let's start with inflation rate, general inflation rate. Previous 10.1, expected 8.2, came in at 8.7. A bit worse than expected, but significantly better than the previous number. But just above there, on the line above there, core inflation rate, we know this is the number that the Fed looks at in the US, and the Bank of England and the Chancellor looks at in the UK. This is the number which affects the basic sort of things that we need to live on, excluding luxuries and peripherals. These are things like food and energy and transport, accommodation. The core inflation rate in the UK went from 6.2, expected to remain at 6.2. The number came in at 6.8. In fact, it's weird here. It says actual, a better than expected result. Of course, that doesn't mean better, just means higher. So much higher core inflation rate, and then PPI input pretty much the same, a little bit lower, actually better than expected on PPI input, core input, and then better on month core input as well. So, and then the retail price index a wee bit higher, and retail price index month on month. The key number here is the core inflation rate. But what I think this means that if the Fed was considering pausing interest rate hikes in the US, they might think twice, because this number shows that we have sticky and enduring and persistent inflation in the UK. The Fed will keep an eye on this across the pond and say to themselves, well, we don't want this situation going on in the US. We've got space to continue to hike rates. They feel like they've got leeway to continue with rate hikes. They certainly won't be considering reversing rate hikes, in other words, reducing interest rates, but they may not even consider pausing rate hikes, and we might see another 0.25, or at very worst, we could see a 0.5% hike. Some people are talking about that. I don't think that's going to happen, but I think we will see a 0.25 after having seen this number coming out of the UK. How this is going to affect currencies is interesting, because if we look at the pound and the reaction that we've seen, let's go across to the pound chart. You can see the British pound has dropped against the dollar. The British pound has dropped against the Canadian dollar. The British pound has dropped against the Japanese yen. And overall, we've seen a negative impact of this number on the pound. You'd normally think that if inflation is high in the UK, the sort of logical conclusion is, well, they'd be inclined to increase interest rates again, and that would be pound positive for sterling. However, I think what the situation is that they may not be able to, or may not feel as willing to hike interest rates further as the US is. I think the US has got the space and the leeway and some backbone to the economy to be able to continue to hike rates, maybe just once or twice, or a little bit each time. But I'm not sure if the UK has the same leeway or latitude to continue hiking rates. So what we see is a negative impact on the economy of this very high inflation, core inflation rate, without the ability to potentially increase interest rates. Possibly they might be able to maintain the current interest rate as it is, but I think generally it's going to be more difficult for the UK to increase interest rates further, and that this inflation will have an impact on the British economy. We're going to see, as we already have, further increases in energy costs, in accommodation, housing, rental, mortgage bonds, car loans, food. I don't know what I haven't mentioned now. Heating, gas, petrol, electricity. All of the things that make up the core inflation number are going to have a tremendous effect on an economy which is already under duress, under strain, and somewhat buckling under the pressure of all these economic problems that are going on. So in summary, I think the US is going to look at these numbers and consider increasing rates further because they have the latitude to do so. I think the UK is going to look at these numbers and think, well, can we actually increase interest rates further? And the consumer and the trader and the investor are going to say this is crippling to the UK economy and also very negative for the great British pound. Well, take care. Good luck with your trading today. We're short on the pound, and let's see how that goes. We're also short on most of these dollar-yen pairs that you see on this page in front of you. If you've enjoyed this content, please give it a thumbs up. And if you're new to the channel, consider subscribing. Take care.